The Australian dollar has dipped to 69 US cents, as the higher-than-expected inflation in the United States has led to the currency strength in the US dollar. The Fed has signaled that it will keep interest rates steady in 2023 after a series of rate hikes this year, and this has led the markets to reprice their expectations for the future policy settings, with the terminal rate now pricing in around a 5% level. Now, this is up from 4.6% just a month ago and up from 1.9% at the beginning of the year. This strength in the US dollar has come at the expense of other currencies such as the Australian dollar. We saw a similar dynamic play out in 2022, where the US dollar rallied strongly against a basket of currencies as central banks around the world, including here in Australia, started to increase their interest rates. The RBA, however, has been slower to increase interest rates compared to the Fed, and the market is now pricing in a peak of around 4.1% for the Australian cash rate compared to the 5% for the US. Now, this is causing some downward pressure on the Australian dollar. In addition to this, we have seen a broad move out of riskier assets such as emerging market currencies, and this is also putting downward pressure on the Australian dollar. The higher inflation in the US has also raised the possibility of a larger rate hike by the Fed in December. The market is currently pricing in a 75 basis point hike by the Fed in December. However, there is still some risk that the Fed could deliver an even larger rate hike of 100 basis points, given that inflation is still well above the central bank's target of 2%. If the Fed does deliver a larger than expected rate hike in December, could cause the US dollar to strengthen further and put more downward pressure on the Australian dollar. On the other hand, if the Fed signals that it is close to a peak in interest rates, this could cause the US dollar to weaken and the Australian dollar to strengthen. For the Australian dollar, the key drivers next year will be the difference in interest rates between the RBA and the Fed. If the RBA continues to hike interest rates at a faster pace than the Fed, this could cause the Australian dollar to strengthen. However, if the Fed hikes interest rates faster than the RBA, this could cause the Australian dollar to weaken. In addition to this, the Australian dollar is also sensitive to changes in risk appetite. If investors become more risk-averse, this could cause them to sell off the Australian dollar and other riskier assets. Now, overall, I expect the Australian dollar to trade in a range of 68 to 71 US cents in the first half of next year. The key risks to this outlook are a larger than expected rate hike by the Fed in December or a further deterioration in risk appetite. If you want to learn more about the factors that influence the exchange rate between the Australian dollar and the US dollar, I'll provide more information below. Thanks for watching.